Hello, hello. Good afternoon. How is everyone doing today? I'll give it a minute or two before I get started. If you have any questions, if you are here, let me know, say hi. All right. Super. How are you doing? Hey guys. Welcome again. Let's go get started in a couple of minutes. All right, fantastic. Let me know, if you're here, let me know how you've been trading, where you're joining me from. If you have any questions, please let me know. All right, I'll give it a minute more and we shall start. Thank you all for joining at this time. Shall get started shortly. Okay, so let's get started. Today we are here with IronFX on the webinar series. I will be guiding you on some live trading analysis, giving you my trade ideas, my views and opinions of the markets. So if you have any questions, please feel free to let me know. Put it into the chat, let me know. I'll be happy to guide you through your questions. So if you have any, methods, strategies that you are currently deploying and trading, right? If you have any questions, let me know. I'm happy to give you my 1-2 cents worth of opinion to maybe help you trade better, hopefully help you trade better and more profitably. With that said, as we get started, a quick disclaimer is that any information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. This material has the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. All right. So what it means in general is that I will be, as I said, sharing with you my thoughts, ideas, views of the markets. So if you do jump into any trades, please make sure you do your own due diligence. Check your charts, check your leverage, check your trade size and margins before you jump into any trades. I can't be responsible for any profits or losses that you might make. All right. So with that said, let's jump straight into it. Oops. First thing I do, right? I think I recognize a lot of names here. I see familiar names here. Is that you all know the first things I do is I look into the news, right? I look into the news. I see where are prices likely to be heading based on the news, all right? Previous news and upcoming news. And then I look into the charts to help me identify levels. So if, for example, I anticipate that the euro dollar should be trading lower, right? I'll look into the chart based on the economics. I think the euro dollar should be trading lower. I'll look into the charts, and if it's showing me some downside potential, then I'll get in. If it's showing me an upward move, I'll wait for it to hit a level, possibly reject the level before I start selling it down again. All right. So at this point, if you have no questions, what I'll do is I'll share with you what happened so far this week. Okay, you can see on Monday, we had these the Swiss franc CPI data was 0.3%, expected a 0.1%. It came out at a minus 0.2%. So like minus 0.2% in terms of CPI. What it means is that the Swiss are actually seeing a month-to-month basis a bit of a slowdown in terms of the inflation growth, right? A bit of a slowdown in terms of inflation growth. Then I'll look into the charts just to show you here. US Swiss franc, clear out some lines. Okay, and then on the 5th, was it the 5th? On the 3rd of October, at that news release, right about there. Okay, at 2:30 p.m. Okay, so we actually saw it here as that news got released, because we saw, they're looking at a slowdown in inflation growth, which could mean that the Swiss National Bank, the SNB, is likely to slow down on further rate increases, right? So if they slow down on further rate increases, that's going to mean, yep, you got it. It's going to mean some weakness in the Swiss franc, right? Because if they increase rates, we're going to see the strength. What we actually saw was, the increased likelihood for a slowdown in rate increase. So we see the Swiss franc weaken, and also we saw the dollar strengthen a bit. So we saw this push towards the upside, right? We saw this push towards the upside. It came up, tested that resistance level of about 0.9950, right? So it came up, test these two levels, it hit that level, and then it rejected back down again. What I like about the US Swiss franc, this is on H4 time frame, is that we've got a good base here at that 0.9750 level, right? 9750 level. It's hit, it's bounced off, it's hit, it bounced off. It came close, 9780, and then now it's pushing towards the upside. What I'll be looking for in this case is if the US Swiss franc can break above that near-term level of 0.9850, right? If it can break above 0.9850, we might actually see it turn up to test that 9950 level. So in terms of a potential trade, you could be looking at above 9864, 9865, relatively tight stop loss, about 30 pips, take profit about 80 pips, a 1:2 risk-reward ratio towards the upside if it breaks above and closes strongly above that 9850 level. All right. That push towards the upside is going to be highly dependent on the dollar index, because now we know not a lot of big news to be had for the US or for the Swiss franc. So any move on the US Swiss franc is likely to be highly dependent on the volatility of the dollar index. So that was the news there on Monday. The US ISM manufacturing data did not have too big an impact. What we followed on with that is on Tuesday in the morning, 11:30 a.m. GMT +8, we saw the Aussie cash rate, the RBA, Reserve Bank of Australia, increase rates was 2.35, expected a 50 basis points increase, but they didn't do 50, right? They did only 25 basis points, taking interest rates for the Australia to 2.6%. What you want to note here as well is in the lead up to the news, we actually saw that headline, RBA set for one last outsized hike before low slows tightening, right? This was before the news. Anticipation was a big rate hike, a 50 basis point hike before a slowdown towards 25 basis points. Another headline on that news release, before the news release, was Aussie dollar rate vulnerable to dovish RBA rate hike, right? A dovish rate hike. That means they're likely to increase rates, but we're going to see the Aussie dollar drop. And then right before the news release, we saw a recession, a headline, recession fears grow ahead of Aussie rate call. So what you see here is bad news after bad news after bad news, leading up to the interest rates decision for the RBA. What we saw in the charts actually was, oops, I'll take that away. We actually saw on the charts here, I'll show it to you on the H1 time frame on the 4th, on the 4th of October. Okay. On the 4th of October at 11 o'clock, when news was released, I'll move it one before. When the news was released, it actually went towards the downside. All right, this was because of the bad news, the less than expected rate hike. We actually saw the Aussie dollar weaken towards the downside. I'll tell you that I actually did get into this trade before the news. I actually got in right about just below that 6.5 level, right? Why I was a bit confident to get into that trade below before the news was I saw that reaction there, right? It tested. So it tested that level of 6.530. It came close. At that point, it tested that level. It came close again in the lead up to the news. As the news was released, we see it push towards the downside, right? We saw it push significantly towards the downside. In terms of my trade, what I actually did was I sold below 6.5. I had my stop loss up there at about 40 pips. Okay, and then my take profit was back down here at about 80 pips. Right, so about 80, right about there. Okay, why so? It's because I saw that as a key support level. Right, key support level at 6.4, at about 6.4. So I had a round number there. Okay, and then so I had my take profit just before that support level. I can tell you that I actually got in before the news, fell all the way down, hit that level. Right, came towards that point, and it came to that point, I got out of my trade within the hour. Actually, I got out within the minute of the news release. Right, so I'll show it to you here on a 1 minute time frame. Again, if you're not super familiar with trading, then I wouldn't go into the 1 minute time frame. I just want to show you the bit of an illustration or the chart view of what happened. Okay, let me just find it. Bear with me. On the 5th at, I know it's getting a bit messy, but okay, there we go. Move that back. On the 5th at this time. Okay, on the 5th at 11 o'clock. Okay, this was the news here. Right, so at the 5th at 8:11, there, that news there, we saw that drop towards the downside. Okay, I think it was here. 11:30, we saw the drop towards the downside. Oh no, it's not the 5th, it's the 4th. Sorry. There we go. That makes more sense now. Within the minute. Okay, so you can see here, this is a 1 minute chart. Within the minute, it actually fell significantly all the way down. So within the minute, I had my trade running, fell all the way down. I got off the trade at about 6.4, just about 6.455 or 5.6, I think. So within a minute, got in and got out of the trade, and then I saw that bounce back up. Very fortunate is that because I got out of the trade, I was happy. Now you can see that the subsequent couple of hours, it shot back up, tried to break above the resistance. It failed, came back down again. Take that away. Right, and then it continued trading within this range for the day, tested again last night, and traded lower. What I actually just did before this session was I had a trade. I saw a rejection of this resistance. You can see that level, right? Consolidation with a rejection, similar to what happened here. So that was a consideration. I was thinking at that point, looks like it might go towards the downside. I want to sell. what happened? I waited one more hour. I waited for that downward move. And at that point, I thought, okay, great, I'll sell there on the close of that hour. Stop loss again, about 40 pips above that resistance level. Take profit level, I had it at 80, right? I had about 80 pips just because of that wick towards the downside. And just before this session, right? So just before this session, it dropped 1 hour, 2 hours. I closed out at about that point there. So I was looking at that level there, and I closed out for about 30 pip move towards the downside. Okay, so that was my current the trade I just did on the Aussie dollar towards the downside. Right now, I'm expecting the Aussie dollar to, as it trades lower, likely to test and bounce off this level, come back up and trade within this range, right? So likely to stay between 6530 and 6450. If it does break lower, then it's just an extension, but it's likely to trade within this range. Movements of the Aussie dollar at this point is highly dependent on the dollar index. All right, not a lot of news to be had for the Aussie dollar now, so these movements are all going to be highly dependent on the dollar index. With that said, that was the RBA interest rate decision. Again, US jobs openings didn't move markets too much. And then we had the New Zealand official cash rates on Wednesday morning on the 5th of October. It was 3%, expected 3.5%, was released again at 3.5%. In this case, what we actually saw was that the Kiwi dollar, take that away. The Kiwi dollar on the 5th of October at about 9 a.m. there. Okay, so I'll move it just one before so we can see the candle. You can see that the Kiwi dollar on the release of the news actually shot towards the upside. It went up by a good 70, almost 80 pips towards the upside as the news was released, right? That move higher, big move higher, is driven not because the RBNZ increased rates by 50 basis points, right? It was already expected that they did that. But if you look into the statement, what you see is that the committee was actually considering 50 and a 75 basis point rate hike at this meeting. So they did 50, but knowing that they were considering a possibility of a 75 basis points rate hike actually gave a lot of hawkish sentiment to the Kiwi dollar, right? Made it very hawkish. So what they actually saw was, because of that, a big push towards the upside there on the Kiwi dollar, towards the upside. Okay, but as it tests that 0.58 round number resistance, and if I went to the H4 time frame, you can see that it's a nice swing low there. So it came up, tested level, rejected, and pushed down again. Overnight, it did come back up, test that level, and reject towards the downside again. What I was actually looking at, or was comparing, is between the Kiwi dollar and the Aussie dollar. When I saw the Aussie dollar, I was actually deciding between the Kiwi and the Aussie. I ended up with the Aussie, but same thing. Consolidation, rejection, pin bar rejection of that 0.58 at that point, right? You could be looking at, if you did the Kiwi dollar instead, you could be looking at that move as well. So a good 40 pips stop loss as well. Take profit 80 pips towards that recent low point. You can see that we're almost there as well. Okay, same move on the Aussie and also on the Kiwi dollar. Again, recent moves. This move towards the downside is driven by the dollar index. There's no news on the Aussie, no news on the Kiwi at this point. So this move lower is primarily driven by the volatility in the dollar index. With that said about the Kiwi dollar, right, about the RBNZ rate statement, interest rate decision, nothing much else. OPEC meeting, they actually released a news that they were going to cut oil production by 2 million barrels per day. So we saw some upside in oil. ADP non-farm employment change was 185, expected 200, got released at 208, right? So we saw some good anticipation that we might see stronger employment numbers for the US. And that's important because not a lot of news today, but into tomorrow, we do have the US non-farm payrolls data to be released, right? US non-farm payrolls was 315K, expected 265, given that an ADP non-farm was slightly positive. We might actually be considering some positive number here for the US employment change data. And also from the previous few months, you see that, right? It was in September, it was 526, expected 295, came out 315. August, 398, expected 250, came out 528. Big, strong number there. July, 384, expected 260, came out 372. Right, so we've seen modest forecasts, and that actual data always and has been beating the modest forecast quite significantly. What we're looking for here in this case is if the US non-farm payroll is going to be the same thing for this month, 315, 265, are we going to see a big change or big number here? Maybe a 300 or 325, maybe. Right, what do you think? Do you think it's going to be a big number or a small number? Put it into the chat, let me know. All right. And as you do that, what you'll notice is that unemployment rate for the US is expected to stay at 3.7%. Average hourly earnings looking to stay at a 0.3%. For tomorrow, what you should actually be considering, not so much just on the US dollar, but look at the Canadian employment numbers to be released as well. Canadian unemployment rate looking to stay at a 5.4%. Employment change looking to go from a minus 3.9 to a 19.5K, right? If that happens, I'll show you what happened before, right? It was in September minus 30.6, expected 15, came out minus 39.7. August was minus 43, expected 14, came out minus 30. July was 39, expected 20, came out minus 43. So it looks like employment change data in the Canadian side hasn't been too good, right? Over the last 3 months, being released at a minus number. If we do see on Friday, tomorrow, a negative number on the Canadian employment change, that could signal further weakening in the Canadian dollar, right? Could signal further weakening in the Canadian dollar, which could mean that, and if we do see that stronger US dollar, so looking at the US CAD, I like that. Let me just clear this out a little bit. I like that it's found a good support at that 1.35 level, bounced strongly towards the upside. Test that. Oh wait, H4. Let's look at an H4 time frame. Right, it's test 1.35. It's bounced up. I like that it's tested that 1.37 last night. Right, and now it's pushing towards the upside. It's pushing up. What I'm looking for here is on the US CAD, if it can continue and break above that 1.37, could the US CAD push higher towards that 1.385, almost 1.3850 level. Okay. To be more specific, about 1.3834. So with that, what needs to happen on Friday or leading up to Friday is stronger US dollar, weaker Canadian dollar. What I'll be looking for in this case will be a buying opportunity above 1.3696, about 1.3723. Take profit about 100 pips, stop loss about 50, or 1:2 risk reward ratio towards the upside there for the US CAD. Depends on employment data on Friday. All right. Makes sense so far? Any questions so far at this point? Let's see. Okay, all good. Fantastic. Okay, so with that, that concludes the news for this week. What I also tell you is that this move or this volatility from the non-farm payrolls for the US could be a bit brief, right? What I mean by a bit brief is that we could see a movements at 8:30 GMT plus 8, 9:30, 10:30, and then it might slow down and peter out, right? Why so? Well, I don't think it'll be a continuous move despite possibility of higher volatility, is that you notice on Monday, Japan's on holiday, health sports day. We've got the Canadians on a holiday, Thanksgiving, happy Thanksgiving, and the US in observance of Columbus Day, right? So it's going to be a long weekend. It's going to be a long weekend for most of the markets, especially the US. So if that given that, we're likely to see traders and investors not really pile on trades because of the non-farm payrolls. What we might actually see is a bit of volatility and then a bit of a slowdown because, typical approach is not to hold on to trades through a weekend, especially through a long weekend. Okay, so that's quite important there to pay attention to. What else could happen next week is that on Wednesday, we do have the pound GDP numbers month on month. What you see here is that it was minus 0.6, expected 0.3, came out at a 0.2. So not as good as expected, but still better than previous. In August, was 0.4, expected minus 1.2, came out at minus 0.6. So in the negative territory, but not as bad as expected. In this case, we might actually see some recovery, but it's more likely that even if we do see any recovery in the pound, the GDP might not have a big impact at this point, because look what happened to the pound dollar. Okay, I'll show it to you here. The pound dollar on the 23rd. If you haven't been trading on this news, where have you been? All right. On the 23rd of September, it broke below that 1.12 level very strongly all the way down towards that 1.03. Let's round it slightly to 1.04. Right? It broke all the way down to that point, and this move lower was because of the introduction from the PM, from the UK PM introduction of a tax cut for the UK, the biggest tax cut in 50 years. Markets grew concerned that given the UK were looking at tax cuts, would they be able to finance their debt? That's why we saw the pound dollar drop very significantly, almost 800 pips or 800 pips towards the downside, right? That move lower what we actually saw as a reaction or a plan to recover from that move was this point here, where the Bank of England came out and said, hey, we need to save this situation. The pound dollar, they're trying to avoid getting it to parity. What the Bank of England did was they said they will buy government bonds as much as required at whatever scale necessary to provide stability to the financial markets. And that's why we actually saw the pound dollar push towards the upside, right? Intervention from the Bank of England pushing the pound dollar towards the upside, back towards the starting point of that 1.12. That move further towards the upside from 1.12 towards almost 1.15, right? Almost towards 1.15 was when when the UK PM reversed her decision to cut, or for that big, massive tax cut. She reversed U-turn on a decision to cut tax for the top earners in the UK, right? So one small move caused the pound dollar to gain a bit more optimism, pushing towards that 1.15 level. At this level, again, now tracking back towards 1.12 because of that strength in the dollar index, or the recent strength in the dollar index. Okay. So with that, what could happen that's why when I was telling you about the pound GDP numbers next week, unlikely to have a massive impact on price volatility, because it is being influenced by a lot of bigger news, a lot of bigger impact news, the intervention, the tax cuts, and the U-turn on the tax cuts, providing the overarching impact more so than the GDP. So with that, what else to look for on Wednesday? PPI not going to do too much. FOMC meeting minutes. It's already a done deal, right? It's just telling you what happened during the meeting. So not likely to have a big impact on price. But what you want to do is pay attention. 13th of October on Thursday, US CPI data year on year was 8.3%. Expectations or forecasts have not been released yet. But if we do see a stronger number, right? If we do see number increase, like what we saw in September was 8.5, they forecasted 8.1, but it came out 8.3 year on year. That's going to indicate that inflation in the US is still high, right? Despite interest rate increases from the FOMC, right? Which could lead to more aggressive or continual aggressive increases in terms of interest rates from the FOMC. So this is going to be a big news event that you would have to pay attention to on Thursday, 8:30 GMT plus 8, CPI data for the US year on year. All right. And then following on from that, on the 14th, on Friday next week, core retail sales data for the US. I think that the fireworks will happen here on Thursday, and then we're going to see some volatility unless this retail sales number comes and has a big surprise. But you can see that generally no real big surprises there for the retail sales, core retail sales, or the retail sales data. Okay, so a lot of news, a lot of big news, especially in the CPI data for the US for next week. For the pound dollar, what I'm looking at, I'm looking to see what's going to happen at 1.12. Is price going to come to 1.12 and bounce back up? If it does, I'll be looking for rejection of that support level. I'll be looking to buy it up, right? Like that. I'll find that recent point there, or the breakout level there. I'll look to buy it up towards the 1.15 level, okay? Or if we do see a breakdown from this 1.12, if it breaks lower, then I'll be looking for that selling opportunity like what happened before. But I don't think it's going to go all the way down. I think let's be reasonable. More likely, we're going to see a scenario of first target level. If it breaks down at about that first 50, maybe that 61.8 level as a take profit, still a 1:2.85 risk reward ratio towards the downside, with a risk level at that 50% Fibonacci retracement level. We're going to see where the price is going to come down and touch that. All right. Relatively straightforward there. With that, let's look at euro. The euro has been very interesting. Why so is because with the way the pound dollar has been moving, right? Big downward move and then that quick recovery or the strong recovery because of the intervention and the U-turn. That's also actually led to the euro recovering as well, right? What you notice is that, or what you should notice is that the dollar index is made up of a basket of currencies, right? It's influenced by a basket of currencies. So main player in the dollar index or main proportion of the dollar index is made up of the euro, and the second biggest proportion is made up of the pound. So when we see the pound recover strongly, that's going to cause the dollar index to drop a little bit. And as we see the pound recover, as the dollar index drops, we're going to see the euro dollar recover as well, right? So as the euro dollar recovers, what you notice is that it has climbed back up to that parity level. It's hit parity and it's reversed towards the downside, right? It's climbed strongly. I'll show you a bit of a channel towards the upside there, right? You can see that good upward move. Oops. That good upward move pushing to hit to hit the parity level, and then now it's turned down. It's trading below that level, below the channel, and then also at that point, right? 9890. 9890, about there. You can see that the last time it's tested those levels, draw it right across for you guys. 9890. Okay, it's tested that point, bounced. Once it broke that level, then we saw that big downward move towards that 9550 level. Okay, so right now we're at that same point. Okay, giving this a bit of a range, we would say that if it breaks below below this point of 9860, if it breaks below 9860, we're going to see quite significant, or we could see quite significant downside, similar to what happened here, right? So it broke, tested, confirmed, and went all the way down. If that does happen, then what we'll be looking for is selling opportunities below that point, about a 60, 70 pip stop loss. I wouldn't go all the way down again, similar to the pound dollar. I would say let's test it. It'll come down to about that 61.8 level at about just above that 0.97 level, round number support level. Okay, so a good one, almost 1:2 risk reward ratio towards the downside. I would say even if you did a tighter stop loss, a 1:2 towards the downside for the euro dollar. Makes sense so far, everyone? Good stuff. Thanks for that. And lucky last, let's look at the US yen. Again, I've had this picture drawn up already and has been useful for such a long time. It's tested, right? It tested 145, 145. As it tested at 145, Bank of Japan has been commenting. This was back in early September, all the way to mid-September. They've been commenting about rate checks, right? Whether they're going to intervene. Markets were anticipating. We saw it once it tested 145, it broke back down, tested, it broke back down. The Bank of Japan policy release, no change, no talk about intervention. So the US yen push towards the upside to test 145.90. And as it tested 145.90, the Bank of Japan kicked into action, right? The Bank of Japan kicked into action, which saw that big downward move towards that 140.60 level, right? This was, in this case, the intervention by the Bank of Japan, as you know, they actually declared that they were intervening, and it brought the US yen down from 145.90 towards the 140.60 level. But what happened? Despite the intervention, we saw the dollar strength continue to push the US yen back up towards the 145 level, but failed to break higher. You can see here, failed to break higher. Again, tried to break but failed. Right now, testing again. Let's see what happens to the US yen as it approaches that 145 level. Anticipation is that we might see it climb up towards 145. If it does break, we might actually see some volatility, something similar here. Let it climb up before a big push towards the downside, or is likely to continue trading within this range. So I think that the US yen is likely to trade within this range, as it has been since the end of September to now, trading within that range, likely to continue at this point. Any questions so far at this point? All good. So I can tell you that I'm not particularly keen on the US yen staying between, no real big trading opportunities as it stays between that 143.85 and 145 level. For me, I like trading more in a trending scenario rather than, that means an upward move or a downward move rather than in a tight range or a horizontal move. Okay. Next one. Okay, so we talked so much about the dollar index. Let's look at the dollar index here. What you would have seen is that the dollar index reached a high of 114.76, 114.75, almost 115. I can tell you that at that point, everyone was asking how high can the dollar go. I had my level at 115, and I said, if it fails to break that point, we're going to see some retracement back down towards the 110 level, and it's just done that, right? A big move towards the downside. You can see if I did a channel towards upside, you can see first was that move as it broke higher, right? And then again, another channel towards the upside there. No, it wasn't a channel, that one. It was just a diagonal support level, right? A diagonal support level. So as it broke up and turned back down right now at that, let's do that, okay? Right now, bouncing off that 110 level at 111.35. What I'm looking for here on the dollar index is if price can break above that point, which is 111.77. I rounded to 112 even. All right, we did a Fibonacci towards the upside here. You notice that 112 aligns up with the 38.2 level. Okay, so can the US dollar get stronger? Quite likely. when so possibly going to continue within this range for now, right? Likely to stay within this range for now. So I'll draw it out, right? Likely to continue climbing like that. If it breaks above this point, it's likely to be because of a good NFP, right? But that's a key level there. If it fails to break above, it's likely because of a bad NFP coming back towards that 110 support level. Okay, so at this point, don't look to be rushing into trades. I think that while there might be some short-term trading opportunities, just be extra careful. We do have the non-farm payrolls to be released tomorrow. All right. Any questions so far? Anyone with a request or anything you want me to look at? All right. If not, one more thing I will share with you is gold. Gold has done very well with that dollar weakness, right? So gold climbed very strongly as it, where was it? 1735. No, 1730 was that level, right? So we found gold previously at that 16.15 level, found a very strong support there, bounced off. This move higher is because of the inverse, a non-perfect but inverse relationship with the US dollar, right? So you can see that move still within that channel. What happens on gold now is that I'm looking to see where it's going to drop to. If we see that dollar strength come back in, I'm thinking that we could see it drop a little bit, but because of that channel pushing up, it could find a bit of a support level. It might drop a little bit, find the support there before pushing up again, right? Oh, wait, that wasn't a very good line. Let me do that again. You could see this push back up again. Okay. How high can gold go? The next level, as I drew that, is at about 1765. Top of the range, top of the channel range at 1765. But this is going to be highly dependent on further dollar weakness. Like we were just looking at the dollar index, looks like it's going to be a bit uncertain for further dollar weakness. So if we do see it break out of that range, out of that channel, then what you could be seeing is it needs to break below 1702 before we could see gold trade lower towards that 1658 level or that 61.8 Fibonacci level. So in this case, I'll be looking for some selling opportunities below 1700. Stop loss just above. Take profit just before that level. A 1:5 risk-reward ratio towards the downside. Okay. So again, please bear in mind, I have just been sharing with you a lot of ideas that I've had of the markets, levels that prices are reacting to, potential movements to where prices could go. Please, if you're going to jump into any trades, do your own due diligence. Don't jump into all the trades, right? Be a bit selective. Like, look, I was choosing between the Aussie dollar and the Kiwi dollar. Just choose one, right? You don't have to jump into every trade. Make sure it's a good trade, and then take it from there. All right. So with that said, any further questions? If not, what I'll do is I'll call an end to the session. And for that, please remember, we do have a non-farm payroll data to be released tomorrow. So trade well, trade safe, and take care now. Bye-bye.